So in this video, we're just going to look at some of the more practical parts of the investment plan that we went over in the previous video about the passive VTI Vanguard Total Stock Market Index ETF investing strategy. So as I mentioned, the first step is to basically open up a brokerage account. And so I'm just going to use Bank of America because that's where my banking is done, and so I can just kind of log in and show you where you can open an account and how the brokerage account looks because I already have it set up here. So once you log in, if you go to open an account, and again, whoever you bank with is going to have some similar options here. I don't know exactly what it looks like for the other banks, but if you, again, bank with one of the big, Wells Fargo, Bank of America, Citibank, or JP Morgan Chase, you're going to find some similar setup here. So you see here they have all these different offerings. And so if you go with Invest with Merrill, it basically takes you to Merrill Lynch, which is a Bank of America subsidiary. JP Morgan Chase, they're going to have their own version of this, but it will basically allow you to open a brokerage account. So you can see they have a bunch of different types of accounts here. General investing, so individual investing accounts. So this is just going to be their brokerage account. Roth or traditional IRAs. So I did a video on what these are in the taxes course. So I encourage you to look into what an IRA is because these could be your main way of investing. But again, you should understand what an IRA is. It's a type of investment account that is tax advantaged. So actually, if you don't have an IRA set up and you can contribute to it, I would actually start with those as your tool for investing. But for now, let's just start with the simple individual investment account. So you would just click here, and it would just take you through a number of steps to open the account. So you would need a social security number, a email address, employment information. So this is not necessarily going to be a important part, but they probably just take that information to kind of qualify you, and maybe for if they have margin accounts, meaning they'll lend you money to trade. I don't recommend this for the beginners, but they'll just collect that information. It's not necessary to open this brokerage account, but they'll collect it. Okay, so once you go through all these steps, I'm just going to fast forward because I've already done this. You'll basically see your investment accounts show up on your page. So if you see here, I have 2 investment accounts through Merrill that I open in this similar way. One is an IRA, or traditional IRA, and the other is a Roth IRA. And so let's just click on one of them and see what happens. So I click on it, and now it's just redirecting me to the brokerage account interface. Okay, so once I open this up, you can see a couple of different things that are worth noting here. So the first is cash available to invest. So this is just the amount of cash that I can buy more stock with. And then you see down here, these are all the different positions that I have. And you can see VTI is one of them. In this account, I kind of do some more fun stuff, but for the purposes of what we're trying to achieve with this particular strategy that we've been talking about, we're just going to be buying VTIs. So I have $5,000 in here that I could put potentially into some new investment. The value of the other positions are here, and I'm not going to go through the entire kind of breakdown of this. I'm just trying to show you how you can quickly kind of get started with your investing. So let's say I just had transferred this $5,000 into the account. I see it show up here. How do I actually now buy VTI? You go to this trade, and we're going to buy stocks and ETFs. So it has different places that you manage your orders. So you go to stocks and ETFs. Okay, so now here is the place that we're going to place our order. So what are we trying to do? We're trying to buy, and we know the symbol. It's VTI. Okay, so you see there's a little drop down that pops up when I put in the symbol. So we see Vanguard Total Stock Market Index. So this is it. I click on this, And now it's going to do something for me. It pulls up a quote. So $195 was the price that VTI last traded for. So we saw that I had $5,429. You can see here is the cash that we wanted to invest. And so let's say this was my whatever monthly savings or quarterly savings that I wanted to basically invest it all in VTI as per my dollar cost averaging strategy, because it's the end of the quarter. I've transferred the money into my brokerage account and I now want to put it into my investment. So what you would do is that you need to figure out how many shares you can buy. Okay, so what is the math? So we have $5,429 to invest. So let's just round down. This is called 5400. I have $5,400 that I wanted to invest, and each share of VTI is $195.66. So I do the math and I see it's 27.6. So you can't buy fractional shares. So in this case, I would just basically say 27 shares. And right now the market is closed as I'm recording this video. So this last price is the closing price. But this will give you kind of a relatively current price of what the shares are trading for. And I think for our purposes, I would just do market orders. There's different nuances to these different types of orders. If you just do a market order, we are not so large of players here to really have a lot of this make a difference. And so this would be my order. I'm buying VTI 27 shares because I basically took the amount I'm investing divided by the per share price. And again, we saw that it was 27 point something, but we just round to the nearest share of 27. We put in a market order, and then you would just preview the order here. I'm not going to do it because I actually don't want to do this trade. And then you would execute. And basically, once the trade executed, since it's a market order, it's just going to execute as soon as there is the shares available. So, and since VTI is such a liquid stock, it's going to probably happen right away. And then you would go back and you would see it show up on your account. And so, yeah, then you would own it. And then you would just repeat this process in the next month. And so just quickly, if you wanted to open a brokerage account with a third party, this is Fidelity. You go to Fidelity's website. They have open an account here. And it's going to be similar options to what we saw with the Bank of America. You have your different IRA accounts. You have just regular brokerage accounts. You have these different savings accounts. And I talk about some of these in the video or the course I did on tax. So if you want to learn more about what these different types of investment accounts are, you can either watch that video or you can click around in this website and they'll probably give you some descriptions. But let's say we're just gonna open a brokerage account. Actually, let's do a Roth IRA. So let's say you have decided that you want to start a Roth IRA. It's going to be just a different type of account. We looked at what the brokerage account looked like in Bank of America. It's going to be very similar. So it gives you a little spiel here. A Roth IRA is for retirement. And again, you can watch the video I did on these tax-advantaged retirement accounts in the tax course that I did. But basically, it's just a type of investment account. It's going to look the same. It's going to have the same kind of interface to buy and sell shares. But it's just going to be in this particular Roth IRA kind of label, which lets the IRS know that these are your retirement assets. And it's just kind of like a different compartment to put your savings into. So, it gives you some information here. If you wanted to open it, you just click on this, and it's asking you if you'd like Fidelity to manage your investments or if you will do it yourself. Let's just say we're going to do it ourselves because, again, we want to buy VTI. We don't want Fidelity to sell us their products because just like Vanguard, Fidelity has a bunch of their own products and they're going to try to sell you those. So we're going to just stick with VTI. So are you already a Fidelity customer? You'd say no. And then, yeah, they just basically take you through the steps. They'll ask you some details about yourself, and then you'll have to fund the account. So again, this is a third party. The money's not going to be in the account when you open it. You're going to have to get it in there somehow. So now let's just look quickly at how to transfer funds to your brokerage account. So we're back to Bank of America here. If you go to transfer, so it gives you a couple of different options here. So if you had opened your brokerage account with Bank of America or Merrill Lynch in this case, since they're connected, you could just go transfer between your accounts. So this will allow you to go from one of your accounts here, and then it will have your accounts listed here, your Merrill accounts. You can see the Merrill accounts are here. So you can go from there, and then you just put in the amount. Okay, so now, and let's say it was $2,000. It's asking my contribution year because basically this is a Roth IRA account, and there are certain tax things that it's kind of reminding me of. If it was a regular brokerage account, it wouldn't have any of this stuff, the contribution year, because it doesn't matter. Because again, with these tax advantage retirement accounts, there's limits to how much you can put into them per year. So that's kind of what this is. But then, yeah, then I would just kind of execute and do it. Now, let's say I was trying to transfer it to a third-party brokerage account that I have set up. The way I have it set up is in bill pay with Bank of America. So you see here, I go down, and one of my options here is interactive brokers. And so I would basically just choose the account I want to take the money from. These are my Bank of America accounts, and put in the amount and the deliver by date, and it would do it. It would transfer the money that way. The other way is through the brokerage itself. So I have an interactive brokers account, and so I went to the transfer and pay. And so what you can do is make a deposit, and I have my checking account set up here. And so you can either initiate it from Bank of America, or I think the preferred way, again, is to do it through your broker. And so you can just click on this. It says use this account. I've, again, set up my Bank of America checking as one of the accounts that's linked to interactive brokers. So I'd say use this account, and then I would put in the amount and then create a deposit, and then it would basically get linked up to my bank and suck the funds out from my bank account and put it into my brokerage account. So these are the ways to fund it. And again, this is why I thought that setting it up with the bank that you have your checking account is easier, because then you don't have to mess with your third-party broker to get the account funded. But again, it's not so complicated, but it's just an extra step that you would have to do. One final thing I wanted to do is also just give you a sense of what you are actually buying when you buy a share of VTI. So what I did was I just Googled Vanguard VTI, and so you see what comes up is the quote here on Google Finance. But if you scroll down a little more, you'll get to the Vanguard website. So if we click on this, Vanguard's website is going to give us a description of what VTI is. So we see here that this is VTI. It's the Vanguard Total Stock Market ETF. And so it gives you an overview here. So it seeks to track the performance of the CRSP US Total Market Index. So what that means, it goes on to say, is that large, mid, and small cap equity diversified across growth and value styles. So this just says that it's covering large, medium, and small companies, and it's diversified across the kind of stage that the company is in, if it's older or newer in terms of its life, because some companies are just starting up and are growing fast, some are mature. Okay, so that's what that's kind of saying. It employs a passively managed index sampling strategy. So there's no one actively trying to pick stocks. It's just following this index. And since it's trying to capture the entire market, but it can't really buy everything because there's thousands of companies, it is just picking a statistically representative sample of the companies. So we'll kind of see what that means when we look at some of the other tabs here. And it has low expenses, which we mentioned is really important, because if you're charging, even 0.5% and you're returning, 6-7% percentage wise, that's a pretty big amount to take out of the 6% return. If you're taking 0.5% of fees, that's almost 10%. It's around 8% in fees away from your return. So a low cost for this type of strategy is really important, which is why we're going with Vanguard, because they're known to have really low fees. Okay, so there's more information here, but maybe let's look at the portfolio, because this is going to show what actually this fund owns. So you see that the number of stocks it owns is 4,124, and it just gives you some more information on like the size of the company. The median market cap of the company is 1.3 billion, or sorry, 130 billion. And then it also gives the sectors. So these are all the different types of industry sectors that this particular fund owns stock in. So in basic materials, there's 2%. Consumer discretionary, which is like clothing, this is all going to be consumer discretionary. Consumer staples are like food and, packaged food and stuff. Energy, which is like oil and gas, financials. So you can see basically all the different industries that they own stock in. Technology, you can see here, is the largest component. So this is like Google, Facebook, Amazon. And then it actually shows the top 10 largest holdings. So Apple is the number one largest, and it goes down the list. This is a technology. I think Amazon is considered technology. I don't think it's considered retail. Amazon or Tesla too. I'm not sure, but see, this is what I mentioned in the lecture on the theory that you're gonna potentially be buying companies that are overpriced. So Tesla, for one, you can definitely argue it's overpriced. Nvidia is another company that has interesting technology, but you could argue is very expensive in terms of the price of the stock. So you can see why this passive strategy may be risky, because you may end up buying companies that are popular but are maybe overpriced. And so you can see here the 10 largest holdings are 25% of the total assets. So that means that just between these 10 companies, even though it owns, 4,000, the top 10 are almost a quarter of what this fund owns. So you're basically very concentrated in these particular stocks. Of course, it owns thousands of others, but a disproportionate amount of assets owned by this fund are just in these top 10 companies. One thing to also mention is that Vanguard itself offers a brokerage account. So you can open an account with them, and basically it is the same or similar to the brokerage accounts you're going to find elsewhere. But I believe I think for the mutual funds that Vanguard offers, you can get basically lower fees. There's some advantage for Vanguard's products that the Vanguard brokerage account offers. I'm not exactly sure. You can do further research on that, but that could be an option for you if you just wanted to stick to Vanguard for everything. When you're buying an ETF like VTI, there's probably no advantage to opening it with Vanguard, but if you want to explore Vanguard and what they have to offer through their brokerage service, you're free to do that.